The question is very basic. How are the digital banks challenging the full-fledged commercial banks like yourselves? And how does this impact new customer acquisition? Shalini referred to that in the previous answer as well. But if you could detail that a bit more, Shalini, and then Samir could add to it from a global perspective.
I think first of all, from an India context, it's pretty clear that at this point in time, there aren't any digital-only banks in India. So I'm sure Samir will come in and talk about his own experience with Mox, which is quite an interesting experience, as well as I'm sure Samir can talk about the likes of Monzo and Nubank and how they're challenging some of the others. But from an India context, particularly, Alok, given the fact that we're a very different regulatory environment and there are at this point of time no digital banks. So the fact remains that there are fintechs out there, and for a bank like Federal Bank, it's literally at the forefront of some of the collaboration we're doing with fintechs. I referred to two of them which are out there in the market, which are exclusive tie-ups with Federal Bank. The entire savings account proposition is with Federal Bank, and this was a journey that started about 5 years back. Federal, looked at its strategy and said, coming back to what I started with, it said branch-light, distribution heavy. We clearly identified the fact that fintechs are an integral part of the ecosystem. We believe it is prudent to collaborate with them rather than compete with them because there are various different strengths that they bring. And I think we invested in the technology that was required for this from an API banking perspective and open banking perspective. And today we are now riding on the benefits of that. Why do we do that and why do we say that? And I alluded to some figures earlier. The profile of a customer who comes through some of these digital banks is very different to the profile of the customer who would walk into a Federal Bank branch. It is not to say one is better than the other or any such thing. Both have their role to play in the growth of the bank, and therefore we believe we need to be open to both of them. And therefore the partnership with Epify and Jupiter is a prime example of where the salaried millennial is coming through a completely digital experience. The customer expects entire thing to be digital, and that's how he does it. So I've spoken about those, but I think a more relevant example would be what we're doing with on the credit card side. We've got an organic credit card proposition that gets us X number of cards every month or every day for that matter. But we also have a tie-up with an entity called FPL Technologies, which issues a card called One Card, which is again with Federal Bank as the balance sheet provider, as the owner of the customer, as the person who's doing the entire stuff on the customer. And that partnership is giving us a huge dividends in terms of the number of cards, because there are very different profile of customers. That's the point I'm making. I think customers demand choice. They demand choice of various kinds, and therefore we as bankers need to be able to cater to that choice. What a Federal Bank branch does cannot be done by One Card, and vice versa, cannot be done by an Epify Jupiter and vice versa. So at least in an Indian context, as we speak currently, it's in our view an era of collaboration with fintechs, recognizing the fact that fintechs have certain skill sets, banks have certain technologies, capabilities, and certain regulatory oversight, which enables us to provide the best of service to the customers. So it's not an either or an or, it's and in our view.
Sure. I think for us, we set up Mox in Hong Kong little less than 2 odd years ago. And this was obviously on the back of the regulator allowing us to set up 100% digital banks. This was part of a fintech innovation drive by HKMA in Hong Kong. And post this, we're also going to set up another bank in Singapore on similar lines, though a bit different. And I won't get into the subtle differences around that. The key, your question is around, how are they different and what does it do to the conventional traditional bank? A few reasons why we did this digital bank. One is we are a reasonably large bank in Hong Kong. We have about 10% market share of revenue pools. We are not the largest. There are 2-3 banks that are larger than us in Hong Kong. And when you look at the market share by demographic and simplistically by age profile, then our market shares were significantly smaller in the younger, emerging affluent mass market segment as a bank, because traditionally the brand of the bank attracts more of the affluent clients. Historically, that's been the nature of our business in Hong Kong. Hence, we needed to do something different. So, a few reasons. So one was that, how do we get market share in the younger, emerging affluent and mass segment? How do we build a brand that resonates with them? How do we build a technology stack that is more modern and enabled to do that rather than, unfortunately, banks like us do have a legacy technology stack that sometimes becomes a challenge in our ability to offer innovative products in the user experience that the younger generation is looking for. That was the logic of setting up the digital bank, right? And we've done reasonably well as a bank. It's less than 2 years, we're almost 400,000 customers. Now, in big markets with big populations, 400,000 customers doesn't sound like a big number, but in Hong Kong, you only have a banking population of, let's say, 5.5 million, right? So it's a reasonable market share in an existence of barely 2 years for a bank. We have a deposit balance sheet of nearly $1 billion US. And we have assets that are growing quite quickly now, right? So to that extent, that's obviously the path to profitability. You're going to make money in a digital bank only if you can grow your lending balance sheet. And that's what we focused on. And we will eventually launch wealth products as well, starting with cash equities in Q4. Early next year, we will launch funds in a discretionary portfolio model for our customers, followed by potentially insurance solutions. So it'll be a full consumer bank with all products except for mortgages. It's too difficult to do mortgages in Hong Kong completely digitally, right? So this is a 100% digital bank, no branches. Of course, we've got a call center that serves the customers, but our intention is we actually treat every call that comes to the call center as a failure because we clearly haven't been able to serve that customer on the app. So that's how we think about call center and the capacities that we have there. The key here is client engagement and user experience that is designed by extensive feedback by clients all through that build journey for us for the products. And obviously the technology stack and the architecture of microservices that are API enabled is quite important for us to deliver that experience to customers. And this is built with a partnership with more than 40 fintechs, including some large corporates as well, right? So, but every microservices is built with the best-in-class provider of that service in some ways, right? So that's the history of Mox. Alok, I don't know whether that answers the question, but what it also pushes the traditional bank to do is to think about how we do product development, how we build capability, how do we think about client experience and client feedback, how do we do marketing, because this is performance marketing at its best when it comes to a digital bank. And the traditional banks really are still stuck in the traditional ways of marketing. And so these are hopefully some of the learnings we will pass on to the core bank as well as we build this up.